Welcome, welcome, welcome to a Get Keys with Kim production, where we discuss all things real estate, legacy and wealth building, community development, and engagement. Don't forget to follow me on Facebook, Instagram, LinkedIn, Spotify, and my website, as well as to share this podcast with your network. And just as a friendly reminder, this podcast should not be considered legal advice unless otherwise stated. Get Keys with Kim does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast. I hope you enjoy. And we're back, folks. I know you've been waiting for us to continue this juicy conversation, so we're going to jump right in, and we want to thank our sponsor for taking a few moments out of their day to give us a little bit of information. So thank you. All right. So we've talked about our bad credit. We've talked about minimum credits. We've talked about and the credit scores that's like our 740, our 640, no 580, rebuilding scores. We've talked about a bunch of different things. However, there were a few things I did want to ask you that I just wanted to make sure that we're covering. And one of those is medical bills. I get that question a lot as well. And we'll say medical bills, and then so do medical bills need to be paid off prior to purchasing a home? And are there any other types of debts that should be paid off prior to getting a mortgage for a home?
Yeah, I'm so glad you asked that because a lot of people don't know that. And again, we talked about people self-diagnosing, and some people become their own mortgage lender and they prepare themselves by themselves.
Scary.
And I hate to see people spend money they don't have to. But when it comes to medical bills, we do not count those. Even if we
say it one more time for the people in the back.
When it comes to medical bills, we do not count them.
Well, she said it, not me.
Even if they show up on your credit report. So I know we've had a lot of bills passed where we're not supposed to see them anymore. And I'll be honest with you, we still see medical collections. What they're not telling you is that unpaid medical collections are still being reported. Once you pay it, it is supposed to be removed. Again, it's not affecting your ability to get a mortgage. However, it does still affect your credit score. That's what people aren't realizing. So you may be struggling with your score because of those collections, but it won't hinder your ability to get a mortgage. Again, it's like $0. Because you can have $10,000 medical collection. It doesn't matter to us.
Baby.
Yeah. I hope that frees some people.
Yeah. And that is always the scariest part for me as an agent when someone says, I just paid off everything. Mm-hmm. And I'm like, but I don't have any money for any down payment. And I'm like,
that's exactly what happens.
I'm scared for you.
Yeah.
Because you just took things into your own hands and you didn't have to do that.
Yep.
So because they're just so scared, they don't know what to do. They've heard different things. Or sometimes one of my best friends, let's put that in air quotes, y'all, for those that are listening, Credit Karma. Credit Karma is going to tell you one score. I know sometimes folks are enrolled in different types of like credit score trackers and things like that, where they get their monthly score every time they apply for credit. So when it comes to something like that, are any of those scores accurate as it relates to mortgages?
No. Just a plain no. So when it comes to the credit score and the FICO system, it can seem very confusing. It's a lot to understand, but I'll tell you this. When it comes to the FICO score, there are actually 28 different FICO scoring methods. So
come again.
Yeah, 28. So when we talk about that algorithm with Facebook and Instagram and TikTok, there are 28 different algorithms to the FICO score. When it comes to Credit Karma, the free site, well, they're not free. Well, Credit Karma is free, but like Identity IQ, Credit Sesame, all those type of sites that people pay, like you said, for like the monitoring, some of those are not even FICO scores. Like Credit Karma is not a FICO score. It's actually something called Vantage scoring. So it's not even your FICO. So that score that you're seeing usually is 30 to 60 points lower when we pull your FICO.
There you go, going low again.
Yeah.
I'm going to just think the worst of you. Not you particularly, but just this whole, it just feels like, I know some people feel like it's like a trap. Like I can't win. How they're 27, you said 28. 28 different.
You know what? You got to put a song in here over this, like, get low with it. Get loaded.
I'm going to put that in there. Y'all, I'm going to just have to do like 2 seconds because I don't have enough money to pay for the royalties on that. Okay. And to use that. But I'm going to put it in there.
But yeah, so when it comes to your FICO score, again, 28 different models, in the mortgage industry as a whole, we're only using FICOs 2, 4, and 5. So when I say 28, it's literally 1 through 28. In the mortgage industry, we're only using either FICO 2, 4, or 5. Our company, we use FICO 4. So on a lot of these free sites, like you said, your credit cards will give you your free score. Your bank account will give you your free score.
Right.
A lot of times if you read the fine print, it has to tell you which FICO method it's using. Usually, they're using FICO 8. If you read the fine print, it's FICO 8. But again, it's not FICO 2, 4, or 5, which is with mortgage FICO. So there are really no sites out there that are free-facing or that you can pay for to get your mortgage FICO. You can pay my FICO, I think it's called My FICO Score. You can pay them and get your FICO and get an idea. But at the end of the day, I love what you said. I'm actually going to use that because you're right. When people go to the store and it's Christmas time, you know, like we just had in December, and everybody going to the store and shopping, and they're saying, "Hey, would you like to get an extra 20% off?" And I'm like, "Yeah, drop me. Yeah, just go ahead and get it." And then when it comes to me, like, "Oh, I don't want to pull my score just yet."
Please don't. It's going to drop.
Yeah. You're right. I'm going to use it.
No, because we can already see that you charged up that Kohl's card that you just got 3 weeks ago.
Yeah. So
no, this is a judge-free zone. We wouldn't judge. And as an agent, we don't see your credit score, so I don't care.
Yeah.
You know, and I love all my clients, but I always like to put that out there is that you need to. I say you vibe with your tribe, which is why I try to connect my clients with lenders that either I have used personally or my clients have used or I have relationship with, because you need to feel comfortable having these very personal and intimate conversations about money and your finances with them. You do not need to have those type of financial conversations with your realtor. We just want to know, are you pre-approved? Because I'm not even going to start. I say start the car. I got to push to start. You know, you have to start the car. I'm not starting it until we know, or at least until I know that you are pre-approved.
Yeah.
So.
Yeah, and that's the smart way to do it, because I always tell people, you watch HGTV for 30 minutes and you saw these people flip a house in 30 minutes. You saw these people buy a home in 30 minutes. It doesn't work like that. That's not real life.
Not at all. Now, in some rare cases, you can get a house in 30 days. But I'm just saying, y'all.
Yes.
They make it look good for TV. It's literally real estate reality TV. Like, it does not happen like that. Move the bus and all of a sudden it's like, oh, and it's everything that it does not happen like that. I have worked, I think I'm on my 100th client.
Yeah.
I think I'm right there. Either I'm there or I'm right there. I think I'm like somewhere between 97 and 100.
Love it.
I have only had 2 that I can think of off the top of my head, and I'm rounding up, that have walked into one house one time, and that was it.
Yeah.
And we were able to then write the contract, and they got it. And that's juxtaposed to another set of clients during the pandemic where we saw 150 houses, which was the most I had ever shown in my life. It took us 4.5, almost 5 months to find her house because we just kept getting.
Yeah.
It's all a fake.
Yeah.
It's phony. It's fake. That's all I can say, y'all. And I'm a rapper, y'all, so I can't be using other people's lyrics anyway. I'm just saying. So yes, listen to Shymeia because she knows what she's talking about.
Yeah.
So Credit Karma, not so much. So really quickly, what is the difference between 2, 4, 5, 8? Like what is the difference?
Yeah, so 2, 4, and 5 is either Equifax, Experian, or TransUnion. So FICO 4 is a TransUnion FICO. I'm not really sure if 2 or 5 is Experian or Equifax, but it's one of those.
Gotcha. It's one of the other.
Company, we use FICO 4, which is TransUnion. But your mortgage FICO, totally different. And this is a good conversation, because if you go to the car dealership today and they pull your score, and let's say they say you're a 650, and then tomorrow you're going to get a mortgage and we pull it and we say, oh, you're a 630. They're like, oh my gosh, they made my score drop 20 points, you know?
Right.
But it's like, no, your score didn't drop 20 points. We have different FICO methods that we're using, and they all vary. Credit Karma is not accurate, but I will say this. It's a good thing to use because, like you said, you got an alert that your score dropped. I think it's good
Absolutely.
that it's free. It's giving you information. I will say this to people. Credit Karma sells your information. That's why it's free.
Yes.
That's why it's free.
Say that one more time.
Credit Karma sells your information. That's why it's free. So whenever we pull your credit and you're on Credit Karma, because we're a mortgage provider, what happens as soon as we pull your credit, Credit Karma alerts all the mortgage lenders who are paying Credit Karma for leads. It says, oh, Kim is looking for a mortgage. And then you get all these mortgage companies coming towards you, and they typically think we sold their information. We don't sell your information to third parties. What happens is if you're on one of those sites, because it's free, you're really a part of a lead service. They're selling you as a lead. And they tell people, oh, she's looking at cars. Then car dealers start sending you pre-approvals. Oh, she's looking at homes. Then mortgage lenders reach out. So that's what Credit Karma does. Again, it's okay to use to get an idea and really to pay attention for like identity theft type situations or something that happened that you know you didn't do. So I think it's good for that. Awareness.
And let me just, I use it for awareness only. But I had already opened it before I knew what it was. And then I learned later on. I just didn't let it go. But before we, because I really quickly did want to ask you about the identity theft. But even before then, let me say this. In this process, nothing is free. I mean, in life, nothing is free. Even love hurts. Let me stop. I'm just playing with y'all. I'm just playing with you. But sometimes it does. Okay. But nothing is free. You know, everyone wants, I want no money down loans. I want, you know, I don't want to bring any closing costs. I don't have any money. All I got is $10. Oh, nothing is free. We have to do a whole nother podcast just on that. And down payment assistance and different type of loan programs and things. Not even 100% financing is not 100%. Like you're paying something, people.
Say that.
You're paying some, nothing is free. So I just had to just take a TV timeout to just, nothing is free.
Yeah.
But I did want to ask Shymeia about identity theft. So for those that have been victims of identity theft or find themselves a victim of identity theft during the home buying process, what does that look like?
Yeah, I thank God haven't had any clients to deal with that. But people who have previously had or become a victim of identity theft, they have reasons on their account.
Yes.
You know, and that's okay. What happens is when we're ready to pull the credit because we have to in order to do your application, they would just simply take the freeze off. We pull the credit and they can put the freeze back on. When you get your credit report pulled from a mortgage lender, that actual credit report that's pulled on day one is good for 4 months. And so we don't have to pull your credit again till that 4-month period has expired. Now, we like to do check-ins because people may go to Disney World and rack up their Amex card or something. And last we knew, it was a $2,000 balance, now it's a $10,000 balance. So things change, but your credit report is good for 4 months. So those freezes you can take off, we can pull the credit, you can put the freeze back on. If someone is experiencing identity theft through the middle of the process, it does get a little more tedious, a lot more involved. We have now creditors involved, credit bureaus involved, things of that sort. Things have to be sorted out. And that would be a case-by-case situation.
So with the freezes, so having a freeze on there, I know you have to run credit again, at least one more time during the home buying process. That's correct.
It depends.
Okay, it depends. Let's just say you have to run it one more time. Why do you have to run it once more if that report was good?
That's a good question.
For 4 months? Yeah,
that's a good question. So it depends on the loan program. So the only loan program that you have to rerun the credit on is conventional.
Okay.
It's called a credit refresh. So we're not literally rerunning the credit. We're refreshing it to see if the balances are still the same. Did the score drop? Like I said, we had a client who went on vacation. I believe he went to Disney World with his family, forgot to pay his card note because he was out of town and having fun, and his score dropped 100 points.
It happens.
Yeah. So that's the only times with the conventional loan, like FHA, BA, USDA, there's no credit refresh on those. Now, somebody's using a certain type of down payment assistance program, like the Maryland Mortgage Program, they require a credit refresh.
Gotcha.
So we do. So when we have those type of situations, pretty much we're saying the same thing you all are saying as realtors. When you get under contract, don't buy nothing. I mean, you get 30 days. You can do this.
Don't do nothing. You are somebody, you are something, but just don't do nothing.
Yes.
I'm going to have to give the little e-bond. Don't do nothing.
Yeah, really.
I used to give my clients one of those straws, like the reusable straws. I'm like, just breathe out of this. This is all I need you to just breathe. It's going to be over soon. Don't do anything else.
Yes.
Just breathe.
Buckle down for 30 days. You got this.
So let me ask you this. Whether someone has been a victim of identity theft or not, if they already have a copy of their credit report, can they just give that to you?
Yeah, that's a great question. Thank you for asking that.
Because I know that is one of the fees. We didn't really get into that, but when you're looking at what a buyer pays for when they're purchasing a home, it says credit report.
Yes. So we get that question often. And the answer is unfortunately no. The reason why is because every creditor or lender uses a different system, right? And they
Makes sense.
all have different information that they're gathering. Everybody has their own overlays, which is simply guidelines or qualifications that they're looking for. My company, we can go as low as a 580, whereas another lender may say we only go as low as 620. During COVID, we had a lot of lenders who wouldn't go below 700. Crazy.
Yeah, that's the risk.
Yes. So everyone has different, what we call overlays, meaning their own guidelines. So for that reason, we have to pull it into our own system so we can see all the liabilities, all the monthly balances. If the person has tax liens, judgments, we need to be able to see everything that we need for our specific company to meet our guidelines. And so we have to pull it in. Now, when it comes to paying for a credit report, it's different. Every company has a different price that they pay for that credit report, but we don't charge ours to our clients until they close, and it's about $22. Where most companies charge you like $125, something like $85. It's gonna cost you something.
It's gonna cost you something,
but it's gonna make it.
That's an episode by itself. It's gonna cost you something.
Yes, there you go. For today's episode.
So what about like disputes? So you're not a victim of an identity theft, but you finally looked at your credit score. You were bold enough to your credit report, and you're like, well, "That's not mine." How do you deal with disputes? I mean, is it something you have to wait until after purchasing a home, and then you're like, "Okay, dispute this," or can you dispute it during the process? How does that work?
Yeah, so that's a great question, and that is one of the main reasons why you want to reach out early. And why you do want to know, like something I do with all my clients is if they're not ready, I'm always saying, hey, pull your own credit report for free. Annualcreditreport.com, you can pull your credit report once a year for free. I always tell people do it in December so you can see what the whole year looks like and you can go into the new year with a plan.
Right? There we go.
But pull it and see what's happening because you're right. You may see something. A lot of times people are juniors or seniors.
That's right.
Something from their father or son is on their report. However, you do not want to dispute in the middle of a purchase. The reason why, when you dispute items on your credit report, what people don't realize is, let's say somebody's disputing 2 credit cards. When you're disputing those 2 credit cards, remember there's an algorithm with the credit bureaus. They take those out of the algorithm, which can sometimes falsely inflate the credit score. So now that person may come to us and we pull it and they have a 650. But then let's say those disputes come out and they say, no, this is yours. You were late. And they push it back. Now you're like a 590. And that happened a lot during the Great Recession where, a lot of people were buying homes and that was part of the trick. Dispute a bunch of stuff, your score goes up, you get qualified, and then it all comes crashing down and you don't really qualify. So because of that, you have regulations from the Consumer Protection Financial Bureau that during the home process, you can't be in dispute. Over $1,000. I don't want to complicate this, but anything over 1,000 can't be in dispute. If you're under 1,000, it's dispute. We're okay with it. Again, it's because the larger the balance, the harder the hit to the credit. So if it comes out and it's really yours and what you were disputing is actually accurate, that credit score may go down. And then you may not qualify.
So what do you do if something is going to be paid off during that time? Because that is going to change, right? The algorithm. Like, let's just say I have a car and my final payment is going to happen, during the month that I plan to buy. How does that affect my ability to purchase if it does at all?
Yeah. So whenever we pull credit, we can see how many payments you have left. And that's like an installment loan. We talked about this earlier, installment and revolving.
Right.
Revolving doesn't count because it's credit, because you can swipe that tomorrow and be right back in bed with them. Whereas the installment loan, you have a set term, right? So you may have 3 more months left. Well, we're not going to count that. You're almost done. So we're not even counting that. But if someone's in the middle of the process and when we pulled it, they had $1,000 balance and like, oh, she may actually just pay that off. We could do something called a rescore, where we pretty much will rescore the person's credit to see where it is now that balance has been removed or zeroed out.
And so is the rescore the same as the refresh, or is it just slightly different?
It's slightly different, but the point of the rescore is to see if the score went up. It's really just to see if the score went up. And it just depends on what credit was paid off, how much weight it weighed against the credit score. But the rescore is really used when we have people who have like a balance and they need to pay it down to hope the score goes up.
To qualify to move forward. Okay. And how long does that usually take? Is there like a set time frame for that?
So once they have an updated statement, so let's say it's a credit card and they paid it off and the creditor gives them a paid in full letter, or we have a statement, we can see that new balance, then we can do the rescore in 1 day and then get the answer back.
So just getting a letter from the creditor. So it's not enough, just to put that on record, it's not enough for someone to be like, I paid that off. It's no, I need something company letterhead signed by the president now, but something from the creditor saying this balance has been satisfied.
Absolutely. I say documentation beats conversation.
Well, aren't you a Dr. Seuss? Okay. I love it. Documentation beats conversation.
Yes, it does.
Let me tell you something. And especially in this business, but prior to being a realtor, I mean, I've been a jack of all trades, people, but I was a counselor, which really only helped me become a better realtor.
True.
But all we did was just document. I worked in alcohol and substance abuse counseling because I thought I was going to be your licensed clinical professional. And I am, just for home buyers and sellers and investors. I've just changed the atmosphere. Just the background is a little bit different. And so that's all, and those in the medical field, we know that we just have to document everything. And so the same is true. So what types of things, when you're talking about, speaking of documenting,
love that transition.
The rapper in me. Let's talk about documents. So what documents or documentation does a person need to bring to you when they're ready to either purchase a home, or have you just kind of look, do a looky-loo over their finances to see where they are and if they need an action plan?
Yeah, so there are different areas that we're looking at. We're looking for credit. We've been talking a lot about that. Income, employment history.
So you have to have a job?
Yeah. Oh, no, for real. Like, can we just a little pin? You do have to be employed. You cannot buy a home with unemployment. And I know that might seem funny, but believe it or not, I get it a lot. So I think it needs to be shared. And that's why people need to share this podcast with someone who might be like, oh, I didn't know that. You can't be on unemployment and buy a home. Your income needs to be stable. It needs to be consistent. The same way you have to have the ability to repay, we have to show consistency and stability in your income. It has to continue for at least the next 3 years. And unemployment hopefully doesn't continue for 3 years. So that's why you cannot buy a home with unemployment.
So the 3 years is important because it could be like SSI,
child support,
child support, alimony.
Yeah. So if your child is 16, we can't use child support because it's going to cut off at 18.
Gotcha.
And it's not the 3 years. And that's good too, because a lot of people don't understand. I actually had 2 clients probably within the last 2 weeks, the same question. child was 16 and 17. And like, everybody keeps telling me I can't use it. I had to explain why. And I just think a lot of lenders don't explain to people. If you explain it to them, they understand.
Just don't say no. Yes. and that is, I promise you, she didn't pay me to say this, folks, but that is one of the many reasons why I love working with Shymeia, is because she is patient and she is thorough.
No, thank you.
You know, I think it's extreme. I don't mind being asked questions from my clients, because clients ask me things that are unrelated specifically to my wheelhouse, which is the real estate process, which includes a lot of different facets, but facets that are not my wheelhouse, right? Mainly like lending. I know enough, right? I know enough, all right, to get you to the finish line. But when we start talking about some other things that we've talked about tonight, and different, you know, laws and consumer this and that, like, I can't help you with that. But when I tell you that when clients come to me, I can always tell whether they've been talking to their lender or not, and or how they feel about their lender. Because you should be asking some of the questions I get asked of you. Now, sometimes people just don't know, and they're like, well, yeah. And then I have to say, oh, no, that's really a question for your lender. Let's give them a call. I'm going to put you on an email or something along those lines. I will always tell my clients, I don't want to steer you wrong, or I do not have the answer to that, but let me get the answer. I'm just not going to guess, and I'm not going to Google. And so I love being able to have a lender that I can go to and that my clients can go to that will literally, virtually hand hold. You know, I pride myself. I always say I meet needs and exceed expectations, right? I meet the need of whatever you're trying to do. So when I saw that, I'm like, she's my kindred spirit, because you are literally probably making the biggest single purchase you'll ever make in your lifetime. And it isn't something to go about lightly. It's not something where you should not be informed. It's not something where you should feel uncomfortable and you don't know what is happening, because the best buyer is an informed buyer. Like, I want you to be able to make your own informed decisions. I start every conversation with my clients saying that, like, I'm probably going to give you more information than what you need. And you may not remember everything, but I want you to have access to everything. I want you to know what I know. And then if you don't remember, always come back, you know, whether it's during the process or after. You know, that is just so important to have a lender that is willing to take the time with you. Because I don't know how many lenders are in the state of Maryland. For those that don't know, I'm in Maryland, y'all. However, I am licensed along with Shymeia in Pennsylvania, DC, Virginia, the Dominican Republic, and Shymeia, where else are you licensed?
Oh, I'm not in Dominican Republic. I'm everywhere else.
We're going to get her licensed.
I'm here for it.
In the Dominican Republic. And so, and I might throw in maybe 2 more states in there, y'all. I have to see where the Lord leads me, okay? Because I'm not just going to jump out there and I don't know what I'm doing. I need to make sure it's on his time and it's right. But I mean, it's just so important that you just connect yourself with someone who is knowledgeable, who is patient, and who will take the time with you. There are like 48,000 realtors in the state of Maryland. I am one of 48,000 realtors just in my state alone, and I'm licensed in multiple states. You can go anywhere. And so you want to go where you vibe. Again, you vibe with your tribe. Mm-hmm. And so I always have vibed with Shymeia because she's just genuine. Mm-hmm. She's like, you know what? Okay, nope, I got an answer for you. Nope, I think we should. And I mean, it always has the information to back it up. When I spoke with another member in her office, like a senior member, he was like, let me tell you, she's going to research. She's going to find the answers. She's going to ask the questions. Like, she's going to do the work that the lenders that I have worked with and other clients of mine have worked with don't want to do. And even if you don't live in Maryland and you don't live in any of the states that we named in which we are licensed, still reach out to us so we can connect you with someone. They're not as good as us. Okay. Let's just put that out there. This is not a shameless plug. I'm putting it out there. They ain't as good, but we can connect you. They have the same spirit. They have the same vibe, people. Okay. And so it's just nice to know that there are people that are about excellence. We're not perfect, but we strive for excellence, baby. Okay.
Yes.
I know I just had to take just a TV timeout for 2 minutes and just put that out there. She did not pay me to say this. Okay. None of the guests have ever paid me to be on this podcast or anything else. I'm just saying.
Thank you.
Vibe with your tribe.
Vibe with your tribe.
Vibe with your tribe. Okay. So before we go, 2 more quick questions.
Sure.
I did want to touch on co-signing. And then, of course, I did want to speak about the documents or what folks need in order to get ready to get pre-approved. So can we quickly talk about that co-signing piece? How does that work? You know, does it matter if you have co-signed on someone else's house and now you're trying to buy? Or how does it work if you want to buy and you may need a co-signer, and what situations, you know, does that come up?
Yeah, you did ask me about the documents, so thank you. So quickly, documents for most recent pay stubs. I'm giving like the most amount we'll need. 4 most recent pay stubs, 2 most recent bank statements, not all your bank accounts, because some people got like 7 different bank accounts. Just the one that you're saving the money in.
That's it. And the ones they ask you for, don't give them too much, y'all.
Yeah, really.
You're trying to give them everything. You're trying to give them the goodies and everything on the
We're
first
just
date.
trying to help you. We're just trying to help. So that we need your 2-year W-2s. So we're in 2023. So we'll be asking you for your 2021 and 2022 W-2s, and then a copy of your photo ID, driver's license, passport. You know, for people who have specific situations, there are other documents, but blanket W-2s, pay stubs, bank statements, photo ID. Very simple, very easy.
Can I ask you a quick question though on that? Because I often get asked about what about those that are self-employed, and what about those that have second jobs like Uber and Lyft and things like that?
Yeah, so if you're self-employed, Uber, Lyft, that's considered self-employed. If you're 1099, that's considered self-employed. If you're self-employed, we are looking for a 2-year tax return history. So we want you to have been in that type of field or work or industry for the last 2 years and have claimed it on your tax returns. I think my battery is going.
You said and claim it on. Do you hear that, folks?
Yeah, and
okay. If nobody knows you're working for Uber but you and the Lord, okay?
Those are dropped off.
Then the answer is no.
Yeah, because a lot of people are doing side hustles, but they're not claiming it, you know? Or some people are getting paid under the table and they're not claiming it. And I just tell people, like, think about that. You're working with the federal government. Do you want us to know about money you don't claim? You don't.
Right.
So you have to have claims before the last.
The webs we weave.
When I talk to clients like that, they go, oh yeah, that makes sense.
Right.
So yeah, you have to have claimed self-employed income for the last 2 years. So we're going to be looking for your 2021, 2022 tax returns. We want you to take a profit. You know, a lot of people looked at what they made, but we look at what you walked away with. So after all your expenses, that's the income that we're using. If you took a loss and you have a negative, you literally made $0 to us on paper. We know in real life you made money. But on paper, you didn't. And so it doesn't really help you. Again, if you are self-employed, it's important, it's imperative. I strongly urge you to reach out to a lender professional and ask questions in advance.
And let your tax preparer know that you are planning to buy a house. And don't wait until it's 30 days before you got to buy the house, because they may need to structure your taxes differently.
Absolutely.
You know, I've run into a lot of situations with buyers who, especially self-employed, like so hairdressers and realtors and things like that, where, you know, we want to claim a lot of deductions. We want to get as much money back as possible or not owe as much as, you know.
Yep.
But when you do that, it looks like you haven't made anything. Like, I'll never forget, I worked with a hairdresser one time, and she ended up not purchasing, but she made like $250 a year.
Wow.
But on her taxes, it says she made $30,000 because then she was her own tax preparer.
Oh.
If you hear me, it's just out of love. I'm not really talking about you. I'm just giving them examples. Okay. I'm just saying, baby, I love you. Okay. So, you know, I'm protecting. Now she's the innocent. So I am protecting the innocent there, but like, you need to let your don't do your own taxes. Okay, now I'm giving advice, but don't do your own taxes. Ask somebody. I can say one of the biggest and best decisions I made as a business owner, because I have a business and then I pay myself through my business. So I kind of get double taxed, y'all. Pray for me. Okay, but that's a whole nother story. Is having an accountant and a bookkeeper, and that person also does my taxes as well. So I don't even have to, when it's time for me to purchase a house, another one, and I got to go back to in America. I got to go back to Shymeia. Okay. At least my tax preparer knows what to do to prepare me for those steps.
Absolutely. I'm so glad you said that, because there are things we can add back that your tax preparer will know, like deductions. A lot of people don't know that a deduction on your tax report, on your tax returns looks like a negative to you, but we can add that back because that deduction was something you needed to run your business, whether it was you purchased real estate, you had equipment. We can use that. And so you're absolutely right. I just wanted to say that. Make sure your tax accountant or your advisor knows that you have a goal of buying a home and they're going to help you. I don't want to give out tax advice because you're right.
That's right. I stay away from taxes, the FBI, the IRS, the DEA. If you have letters, I don't want no parts of it. I'm just saying, unless you're like, the National Association of Realtors, the Maryland Association of Realtors. I'm near your, GKT, Get Keys team. I'm just saying, those are the only letters I deal with. I'm just saying. So, and quick question, even on that topic. So I have run into situations where buyers owe money to the government, whether it's state government, federal government, like they have some type of judgment against them.
Yeah.
Can they still purchase? Like, how does that work?
Yeah. So again, it's going to depend on the situation. If you have a judgment, you have to pay that off. The judgment has to be paid unless you're in a payment arrangement. If you're in a payment arrangement and you've already been in that payment arrangement and you've already made 3 consecutive payments, meaning if you got into it, you made the payment January, February, March, and you continue, you'll just use that monthly payment amount. But if you owe taxes and you're not in a payment arrangement, unfortunately, you want to pay those off in order to close. And that's important because some people owe a lot of taxes and haven't put themselves in a payment arrangement. And that's not something. So I'm going to just park here real quick. That's why you want a good lender. I mean, there are many reasons why, but especially because if your lender doesn't catch that, when you get under contract and you owe taxes, and you don't have time to get into a payment arrangement and pay 3 monthly payments, because that is the guideline. That's not our guideline. That's the federal guideline for the agencies. If you don't have time to do that, you have to pay that. And if you don't have the money to pay that, now you have to walk away from the deal and possibly lose money.
Yeah. Let me tell you something as a realtor. There's nothing worse. Again, my wheelhouse is real estate. Contracts. We are not attorneys, but in the state of Maryland, we have to know real estate law. And so that is my wheelhouse, getting you to get keys in hand. I'm not helping you to finance it. I'm not doing the title work on it. I'm not, doing the home. I'm helping you get these things and get through them, but I'm not the home inspector. I'm not a surveyor. I'm not any of those things. However, when a buyer chooses a lender that either they've never worked with or that is subpar, and lenders miss vital things, it hurts everybody.
Yeah, really.
In more ways. I can't stress that enough, which is why I'm not saying that the people that I work with are the end all be all. What I'm saying is they are the end all be all. Okay? Because they are tried and true. They have put in the work. I have seen them either rise above challenges that buyers have brought on themselves or issues that have come up with credit. I mean, all kinds of things. I'll never forget, this actually happened this year. I won't call the lender out. But lender missed a whole chunk of like a job. Like you have to, so Shymeia was talking about how you have to claim either side hustles or second jobs. And then it's 2 years, right? You can't just have just started it 3 months ago. And the lender totally missed that person had not been on their job 24 months. They had only been on their job at that point about 19, 20 months. When I tell you, not smack dab in the middle, but at the very end, when they caught this.
No.
The pain, the anguish, having to be the one to tell that to my buyer, like break it down. So I really love lenders that speak layman's terms. We don't understand, like, I understand it because I'm used to that type of jargon, that type of language, and, underwriting and this and that, and this is what this means. And this is, all of this. Y'all know, okay? Y'all know what I'm talking about. So I ended up having to be the one to explain that to the client. I mean, really, the lender should have done it, but I ended up being the one that had to explain it. And it just broke my heart, because here they are trying to move. We have a seller that's thinking they're going to sell a house. It was around the holiday time. So they thought, like, we had so many plans for that house. And let's be for real, because I'm an agent that's going to keep it 100. Even though I didn't plan the money, because you never plan money until you receive it. I had some thoughts of things I wanted to do with the money I was going to get paid to. Okay. So I'm thinking, okay, maybe I go on vacation. Maybe I'll put a little weave in my hair. I don't know. I don't even remember what it was. So it's just a hard situation where nobody gets paid. Buyer doesn't get a house. Seller doesn't sell.
And seller may not get their house because they were probably buying a house because you were buying their house. Yeah.
Stressful. And so, here comes the agent. If they're good, if they're great, they're me. But if they're good, trying to save the client's earnest money deposit, trying to save, writing letters for landlords, all kinds of things, because now, we're just in a business where you just have to pivot.
Yeah.
And so you want someone that's not going to put you in those type of situations. It's just so hard. And sometimes I want to tell my client, you have a terrible lender. Yeah. They're like, I can't reach them. I'm like, well, if you can't reach them, I can. They don't even know me. Like, you're the one giving them the business and they don't even want to talk to you. Shymeia, she is the queen of voice notes. I just love it. She will answer the phone. And this is why, you got to vibe with your tribe. Now, I am an agent who has worked beyond traditional working hours. However, I used to show houses up until midnight. I'm still hungry just like that. And I want to show houses up until midnight, but that's just not healthy at that point. And I do have a family, so I have to be mindful of that. But let a client tell me, normally I shut everything down at 6:00, but let me take a client out and at 5:45, we're done looking at a house and they want to put an offer in our house. I'm not going to be like, oh, I'm sorry, my office hours. If you're a 5 Heartbeats fan, what are my office hours? 9. No. So I'm not going to do that. I am going to finish what I have started with my clients always. However, it is good to know that I can call Shymeia and say, Shymeia, I need an updated pre-approval letter, or I need this, or the seller's agent wants to speak to you. And it was amazing. Let me tell y'all, it was an amazing feeling. Shymeia and I closed on a home less than a month ago, maybe 2 months ago now, right? And it was a multiple offer situation. So there was more than one contract on the home, and one of the contracts was ours. And the other agent was like, even though the offer was slightly better, your offer beat out the other offer simply because what name was on there, baby?
Shymeia Lee.
Child. Okay. Now what more do you need? Now that's some clout right there. My prayer has always been, Lord, let my name be in rooms that I haven't stepped in. Shyameia's already there, y'all. Her name in the room, and she not even in the room. I'm here trying to, negotiate. I would like to say I did some great negotiating myself, but I want to just tell y'all that, bam, sometimes it's just having quality professionalism and professionals that make the difference in a contract. Your lender can make or break, and the appraiser can make or break a real estate contract. Get a good lender.
Yeah. And get a good agent. So I have to also toot your horn because, I work with a bunch of agents and you go to bat for your clients. And I love it. And with that same client, you would not let her give up. You were trying every nook and cranny And she was ready to throw her hands up. You like, baby. Come on. Come on now. And that, I love that. I love that. And it's so many agents out there. I didn't even know 48,000. That's crazy. But it's so many agents out there. And I think it's important for people to realize that we keep saying it and it's a resounding sound, but it's true. The biggest decision you're ever going to make in your life. I know your good cousin just got their license. I know your coworker does this on the side. But you need a professional. You need a professional. You can trust that person with your health. This is going to make you money. People don't realize when you closing at home, you just entered into 40% net worth. More of your net worth, increasing just from buying a home. You're just looking to have a roof over your head, but you don't even realize you just set your financial future up just by buying a home. So what's your cash app?
What's our cash app, Lord?
No, but truly, you want to make sure you have a team that's going to get you to the finish line. Not just a good lender, but a good realtor. Somebody who's going to negotiate on your behalf. Somebody who knows the contract. You know your stuff. And it's good for us, too, as a good lender. It makes your job easy when you work with a good realtor. Because some realtors are new and they don't know and they just like the fancy glitz of it. But when you have somebody who cares about the client and cares about the transaction and wants to see everybody succeed, you didn't just worry about your client. You were thinking about the seller. You were thinking about the other agent. And I just think that's important. So kudos to you.
Thank you. And I think that is the difference. The difference between, boiling water and not boiling water is 1 degree. And we are that 1 degree. It's the little things. We're not saying that, we service everybody and we can, but what we're saying is we just know our stuff. And this is not even this is just facts. Yeah. And you can't argue with that. You have to be passionate about this business. It's like teaching. Everybody's just not called to it. I know I was called to this. I'm just passionate about helping people change the trajectory of their lives and using real estate as the vehicle to do that. That's it. I am just the conduit. I'm just the middle person that gets them to that's it. Let me tell y'all what I call myself. I should probably trademark this. I call myself the real estate doula, okay? Because I be birthing, okay? I'm birthing stuff here. I'm bringing new homeowners. I'm ushering them into this world and then making them grandparents and everything else when they buy their investment properties and when they leave legacies for their children and for those that they love. This is just one piece of this puzzle. And so that is why not only this podcast is important, but that is why I choose the guests that I choose, is because they are amazing. They stand alone. They are set apart. I mean, everything I feel about myself, I feel the same way about Shymeia. You just vibe with you don't have to use her and you don't have to use me. We're just here to be a resource to you.
Absolutely.
But be smart. Smart decision.
You need a show.
I'm just saying. I'm just trying to help you out. Again, this is not advice, simply suggestions. Now, we've covered so much, Shymeia. I know even from this, I think we started out with 21 questions. I think we're now at 44 questions. It's okay. And I know after this, folks are still going to have some questions. We're going to be doing a live and have opportunities for people to join us and ask your questions. However, you can definitely feel free to reach out to either one of us. If it's about credit and mortgages, baby, go to Shymeia. Okay. However, you can go to either one of us, but I definitely want to be able to share your information with my listeners. So Shymeia, how can the good people, I need to come up with something, not like a metaverse, like Get Kiaverse. I'm going to come up with something, y'all. Okay. What should I call it? Just help a sister out.
I love it.
Okay. So how can folks reach you if they have a question, they want to work with you, they want to follow you? How can they reach you?
I am Shymeia Lee everywhere. SHYMEIA LEE. I'm about to start rapping with Kim.
That's right. Wait, say it one more time for them. Slow it down so they can get the Shymeia right, baby.
Shymeia Lee on all platforms, Facebook, Instagram. You can Google me if people want to check you out. So it's Shymeia Lee, SHYMEIALEE on all platforms.
M as in Mary.
M as in Mary.
To make sure y'all heard it not once, but twice. I want to thank you so much, Shymeia, for joining me today. Like, I knew this was going to be an amazing start to 2023, but I mean, well, I knew I had the right person for the job, baby. No pun intended. I knew I had the right person for the job. So thank you so much for joining us. And thank you all for listening in to another edition of Real Talk and Real Estate with your girl, Kim McBride. Be sure to follow me everywhere. Okay. You can go to my website, www.getkeyswithkim. Follow me on Instagram, Facebook, YouTube, TikTok, LinkedIn. What else they got? Okay. The metaverse. I'm going to have some Bitcoin in my name. Maybe no Bitcoin. Okay. Maybe not that. But follow me everywhere where you can follow a folk. I'm a folk. At Get Keys with Kim. Thank you so much. Have a good day on purpose. Talk to you soon. And that's a wrap, folks. Looking forward to you guys tuning in another 2 weeks for a new episode of Real Talk and Real Estate with your girl, Kim McBride. Have a great day.